Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with some delayed but very important data points. We'll be looking at October preliminary durable goods, Philly Fed, and GDP. Second time around the block, delayed. Third quarter numbers. We're looking for 3.3. Zoom, zoom, zoom. 4.3%. 4.3%. That is a nice jump. And I know many may question day the gathering, but on the surface, this would be the strongest quarter going back to the third quarter of 2023 when it was 4.7. This is strong. 3.5 on consumption blows away the 2.7 we were expecting. That would be the best since the last quarter of 24. On the price index, here's some not good news. 3.8% on the price index. That's much higher than 2.7 we were looking for, much higher than 2.1 in the rearview mirror. That would equal the first quarter of 23 to find a higher price structure. You'd have to go to the last quarter of 2022 when we were at 3.9%. Now, if you look at core, a different story. The price index was warm. Core, well, as expected, but still warm. 2.9 is what we were looking for, quarter over quarter. Personal consumption expenditure price index. Now, issue is 2.6 was our last look, so it's up 0.3. 2.9, well, 2.9 would be the warmest since we're at 3.3 in just the first quarter of this year. Now, let's go to Philly Fed non-manufacturing, comes in at minus 16.8. That is actually very close to expectations. That would be the weakest read since October's, minus 22. Now let's go to durable goods. These numbers are October preliminary, minus 2.2%. We're expecting minus 1.5%. That would be the weakest durable goods outlook since July of this year. And if we look at transportation, well, it definitely improves. Close to expectations, up 0.2%. Up 0.2. Well, we're up 0.6 our last look, which now got upgraded to up 0.7. To give you an idea, up 0.2 is actually the weakest quarter going back to unchanged quarter, and that was in April of 25. Let's look at non-defense ex-air. This is a proxy for capital spending, coming in up 0.5%, better than expected. Very solid revision in the rearview mirror to up 1.1. Up 1.1 would comp to May when it was up 1.9. Up 0.5, well, up 0.5 would be actually the weakest going back to minus 1.5 in April, but still a solid number. And finally, let's go to shipments. On the shipment side, up 0.7. This is good news. Things are moving again. This is multiples of the up 0.3 we were looking for. And in the rearview mirror, a very healthy revision from up 0.9 to up 1.2. After all of that, what's going on? Well, interest rates are to the upside a bit, and that may have something to do with the pricing index on the negative news side. But on the positive news side, better GDP is always good. We'll let the experts pick apart the day of the gathering and all the issues over time. That should smooth out. But as I said, on the surface, powerful number. The pre-opening equities haven't really responded much. Dow Jones was down. The Dow futures was down about 20 before the data release. It's now down about 37. Real quickly, gang, should we close here in the dollar index, it will be a 2.5-month low. Back to you.